Hello friends, I'm back again and I hope you can hear my voice and see my screen. So as you can see on the screen today, I'm going to cover the topic how to be a successful trader. Okay, so I have what has inspired me to make this video is that I see that a lot of people on YouTube without having proper knowledge give you tips and advices on how to become a successful trader. So I thought I'll put in all my knowledge and share that with you guys so that it can help you in becoming a successful trader. And I have done my best to cover the things which are important, and if you need something more, you can definitely comment and then I can add that video for you. So let's get started, guys. To be a successful trader, there are certain changes which are required. So I've divided this into two sections. One is to develop a trader's psychology, and two is a technique to trade. So this contributes to 100%, guys, and trader's psychology is 80%. So without this, you cannot be a successful trader even if you know the methods to trade and strategies to trade. So in this presentation, I'm going to cover a little bit overview about psychology, because psychology is a vast subject and one needs to spend time to analyze your own personality and emotions to strike a balance, because that cannot be done instantly by looking at some video or taking somebody's advice. You need to work on that. So let's go forward. So what are the things which you need to focus on psychology? How do you actually develop a trader's psychology? You need to train yourself to be free of emotions when trading. Okay, I'm going to cover each of these steps, but I'm going to give you certain examples also so that you can understand this better. What do I mean by saying that you need to train yourself to be free of emotions when trading? Means that when you're having a good day or a bad day, you should not have those emotions blinding you from watching the market and the opportunities which are presented by the market to you. Okay, most of the time you get blinded when your stop loss is hit. You only think that your stop loss is hit, you have lost. Example like 2000 rupees. You don't have an ability to look forward that the market is going into a different direction. There can be a possible trade for you. So this is what I meant. You need to train yourself to be free of emotions when trading. And I have covered this second point in this sentence itself. Market gives you opportunities all the time and your emotions blind you to see those. So don't rush into trades. Okay, and if you fix your risk by stop loss and mentally accept it to trade, like for example, you have made your mind that 1% of my capital is the risk, maximum risk which I'm going to take, and that is what I'll keep as a stop loss for every trade. Then you don't have to worry. You have to think that as an investment and then trade accordingly. Even if you lose 10 trades, you're not going to lose the entire money, because that is going to come back to you in one trade itself. If you trade in 1:3 ratio, I hope you guys understand 1:3 ratio. And do not overtrade, my friends. A lot of people have this habit of coming into the system every day morning sharp by 9 and opening the console, and without even getting a trade, you just go by tips, news and everything, and just go and buy something or sell something, which will in turn make you lose your money. So be patient, wait for the correct trade to come to you according to your strategy, and then only trade. There are many days you won't find such kind of trades. You can be patient and do other things. Saving your capital is the key. Always remember this. And next point is stop associating money to material things, which would what do I mean by saying this is that when you lose something in a stop loss, you will always feel that if I had used this money for something else, then it could have been better than trying my hand at trading. So these kind of emotions should be kept aside. As I mentioned in the first point, you have to be emotionless, and in emotions itself you should not be relating money to any other material thing, so that your trading becomes easy. Think of it as an investment. Like if you're opening up your business, I'm sure, to take an example of a restaurant business, you need to set up everything. You need to have tables, then you need to have your kitchen, then your cook has to prepare something and keep ready, and then you wait for customers to come. If the customers do not come, your food gets wasted. So it's the same here. You have to wait, you have to invest certain amount of money, and then only it will be beneficial for you in long run. So think in this direction. And I may not be a complete judge on psychology, so I would advise you to go through these books, which I found very interesting and very helpful in my journey. So I have mentioned the names of the books. One is Mark Douglas, The Disciplined Trader. There's one more book from Mark Douglas, which is Trading in Zones. That is also good. And Think and Grow Rich is all-time favorite. And NLP technique, you should learn this so that you can understand how your mind captures emotions, memories, and whatever you feel, how is it getting captured from these 5 senses. And then The Intelligent Investor by Benjamin Graham. This is one of the very oldest book, and every trader must have read this book. Okay guys, now let's move to the second topic, which is technique or method. This I'm going to cover in a lot of points. There are a lot of points to be spoken about, so let me help you understand what do I mean by saying technique or method. So friends, you need to have you need to put in a lot of hard work if you have to trade. It's nothing like you go into the system, have a trading account, and you open it, and the moment you open it you start making money. It doesn't happen like that. If somebody is fooling you that use my software, it is going to happen, it is not going to happen. You need to apply your own mind, you need to work hard to understand the things. So let's go point by point. First point is you need to do your homework for scanning stocks a day before. Yes, you need to be prepared for the next day. That means if today is Monday evening, then I need to be prepared for tomorrow's trade. That is, I need to identify end of the day what are the stocks which are probable for me to be picked up for tomorrow's trade, according to my strategy, whatever I use. So you might be having your own strategy. So you should see which are the conditions which is satisfying, and you should list down those stocks and add it to your market watch. And second point is keep away from tips and news channels. They have their own agenda, so you better be off with your own scanning technique and with your own strategy, and follow your own method. Do not get influenced by others. And have your setup ready, that is your laptop on, demat account open, and your index is on, what are the market watches is on. So everything has to be in place before the pre-run so that you do not miss any trade. And most of the time it happens that you find a stock and suddenly it starts going higher. In that moment, the moment you get that feeling that I should trade this, and you put a buy order, the next moment it starts going in the reverse direction. Now, have you thought why it happens? It happens because of the lack of knowledge, is what I can say. As a novice trader, you always enter at the end of the period where the stocks have reached to the maximum. So how do you know that this stock is going to come to this end and it's going to reverse? You will not know until and unless you are a professional trader. So you have to always be watchful and never run after stocks which are running. They can reverse anytime. So wait for your pattern to emerge. Suppose you're looking at an indicator like MACD or RSI or a stochastic, then you wait for a pattern that what exactly is trend, what is my pattern saying, what is my indicator saying, then only take the trade rather than jumping on that running train. And if you achieve your target for the day, then you are well off. You need to stop trading for that day and move on, so that profit what you have generated, that is accounted for the day. If you trade more, there is a possibility that you might lose that profit for that day. So it's better you stop trading for that day. And never trade products which you do not have any knowledge about. So what do I mean here is, there are many products available in stock market, like there is cryptocurrency, there is futures, there is options, there is commodities, there is currency market. If you have knowledge about any of the fields, then you should trade in those fields only. Like if you are trading in equities, then you become an expert in equity, and then only look at other products, rather than playing all the products and losing all the money you have. It is better to focus on one product and become a master of it. I hope I'm making sense. Everything takes time, so be very patient and you would be successful. This can be applied anywhere, in any condition, in any kind of, whether you're doing a job or business, everywhere patience matters, even if your relationships also. And maintain a ledger of all the trades to study and analyze. So this is very important. You need to maintain a ledger of all the trades. Maintain a ledger of all the trades to study and analyze. Every trade you have taken, every chart you have looked at, and observations you have made, always maintain a log of that. And day-to-day basis, whatever are your learnings, even that you should note it down in an Excel or in a book, so that when you refer and go back, you will always find that interesting, that how your journey has been. And remember, positive and neutral days are better than negative days. So you might be trading 5 days a week. There will be days like which is positive, which is negative. Always try to encourage yourself to make a day neutral if it is not positive. So it's always better to save your capital, so you can have positive days and neutral days, but you should have very less number of negative days to be a successful trader. Let's move to the next slide. Okay, so this is an interesting one. Most of the people think that they can start trading without having any experience or knowledge, or just for example, like if you are wanting to get into a job, you have like 16 years of education, then you have joined that company, and then you learn, then you gain experience, only then you get paid well. But in trading, most of the people think that from day one onwards they want to make money. No, it is not true. There are many people who's got like 15 years experience, 20 years experience, and who have been trading in the market for long enough. So any novice trader entering the market is only going to give them money rather than make money. So be careful, and it's always better to get trained. Find a good course from reputed institute and train well before starting, is my advice. And this is my personal advice: learn to trade on price rather than on indicators, because this works really well once you get trained. How to do that? You need to do a course on this. It is not easily doable, but I'm sure you can spend some money and time and find a right institute to understand how price can be traded. Keep volumes in control. This is the critical part. You need to avoid blowing up your account, and by blowing up I mean that you will lose all the money in your capital if you do not control your volumes. Always have some spare money. If you have like 10 lakhs capital, always save 2 lakhs and trade with 8 lakhs, and keep the margin useful, and trade with low volumes, so that even if you have to take a reverse position, you should be having enough margin to do that trade in the case of stop loss. And always trade in top stocks which have high liquidity, and F&O stocks which most of the like top 50 stocks or top 100 stocks, so that even if the trade goes wrong, and if you have to carry that position, even that will be safe, because these top 100 stocks will always come back to the prices from where they have dropped, and they will show an upsurge and give you profit if you hold it for some time. I have tested this and it happens. And follow market trend, which means most of the people must have told you that follow market trend, always trend with the market. And what exactly do they mean? As per my understanding, they mean that if you are buying a stock which is falling, is wrong. If a stock is falling, and even if there is a indicator which is saying that you should buy this on that day, I would suggest that you should not buy that, because that is not the trend for the day. The trend for the day is selling. So you should look out for opportunity and pattern where you can sell this stock at a better price. If the stock is in uptrend and positive, then you can look out, do the same for that to buy. I hope you understand this. And last but not the least, you need to choose a trading platform which has features and offers you monthly brokerage rather than percentage on transaction value. There are many brokerage firms which give you a monthly plan. Say you pay X amount and you can trade unlimited. You should always opt for these kind of plans if you are a day trader or your trading volumes are higher. If you trade only once in a month, then you can definitely go for a plan which is like per transaction you have to pay X value, which is fine. So I think I have covered all the points which I found out to be relevant and helpful, and this is my personal experience, friends. This is not from anywhere else, so I thought I'll share my experience. I am also a trader, and I have been trading for almost 5 years now, and I have been touchwood, did well for myself, and I just want to say that every day is a new opportunity. So wait for it and trade well and follow all the rules which are set by you, and you have to be disciplined to be a trader. So thanks for watching and stay tuned. If you need any other videos, you can always comment. I can come back and get you those videos. Thank you for watching.